is Thursday, April 24th. China, still a big issue. I mean, we'll talk about it. Looks like the futures are flat, maybe up a little bit. Something may have happened in between me talking. So always take the podcast with a guidance that news could have changed in this market. We're going to go over a new Trendspider feature that is game changing if you actually do options or if you're a programmer. We will go over why buy and hold. There's a couple of really good examples of buy and hold. We will go over China. We'll go over what Besson said. We'll go over what China said. An example of a Tesla purchase that turned $10,000 into $200,000, and it was buy and hold. Could he have optimized it? Is it a good thing? Is it a bad thing? Blah, blah, blah. We will go over a Nancy Pelosi buy that you could get at the same damn price that she got it at. We will go over gold. I like Bitcoin more. Don't forget about GLP-1s. We're in that. I will give you 3 stocks that I like after their earnings. They've already reported earnings. These are good companies with good products, and they should continue to grow. We'll go over IBM. I can't believe that one's down. Texas Instruments. Is this the link back to semiconductors? And we'll go over earnings tonight with Google, Intel, T-Mobile, Celestica, and then paid members. I just did a 10 stocks that got an entry in the 4-hour algorithm, and I took you through in detail about these 10 stocks. Some are buys, some are holds, some, I don't know why it got an entry in the 4-hour algorithm. I know why it got an entry in the 4-hour algorithm. I wouldn't buy it. Honest to God, so we'll go over that. It's a risk reward, and that's for paid newsletter subscribers. But let's start out with a Trendspider, a new feature. Okay, connects external APIs to Trendspider. I don't even know what API. I used it in my product thing, but I can't remember what it actually stands for. But API basically connects out to a secondary tool, so you can use it. This is a big deal, and they go over it all here, where Trendspider is the platform that will reach out to other third-party data sets, like live posts from X, personal data from Google Sheets, connecting third-party APIs. You basically bring your own data, connect it to an API source like options flow, sentiment data, spreadsheets. You code it in JavaScript, build with a language and skip the learning curve of proprietary systems. Trendspider has showed me, and I'll get Nader to show me on the tool, how you can just put this into AI. You don't have to know JavaScript, and use AI to build faster. Integrated workflows built for builders. Again, it might not be for you, but let me show you one example that Trendspider just did to show off what's possible. With the new update, we built an options chain indicator using NASDAQ's API. Track options pricing and open interest in near real time directly on your chart. It puts the options flow on your chart. Now, I'm not an options guy, but this is the bid, ask, and last. Okay, there's the puts, bid, ask, and last. Okay, there's the ratio. This is important if you are trading. This is huge. Not only do you get an options chart or a pricing chart, candlesticks, but you get the options chart and you can import it. That's the key. Everybody who signed up yesterday for their little trials, import it. If you like options, put this on your screen. It's a great, great tool. Again, if we have some type of programmers in my listener sphere who can build things, share it. Put it on the newsletter. Go into the newsletter, or you can just email me, and you can go into the chat right here, and you can put it in there. Share it. I'm not a builder. I don't plan on building. Again, I barely use Trendspider for the full capability of it. And the reason is I've gotten my system down. I've got a system that works. This is huge. So I just wanted to point that out. And if you want Trendspider, how do you get it? You go over to my link tree right here, and you can get that top link right there. Okay. The lowest tier, just so you're aware, is $648 for 12 months. It's the best deal out there. You save over $19 a month, 8% forever. It's a good deal. I mean, again, if you're not trading enough and you don't think that the $648 is worth it, don't get it. Don't get it. But I do think this is a big deal. So, just out there. Now, Ben Carlson, who is one of the hosts of the Animal Spirits podcast, who I really, really like. He's great on Twitter. He is a buy and hold guy. And he is the author of the Bob story. What if you invested just at the all-time highs? Okay. This is an updated portion of the Bob story that he wrote September 17th. And so if you just look at this, what if you invested only, and I'll include the link to this newsletter in my newsletter, but you can rate the Bob piece was written in 2014. Okay. 11 freaking years ago. And you can use it. You can even watch it on YouTube, the Bob story. Again, if you're a visual guy and you listen to my podcast and you just, it is 5 minutes long. Okay. And they do a great job of animating it. It is fantastic. It is one of those that you want to listen to so that you know when we're not at all-time highs, because we're not at all-time highs. Okay. When you look at this and you see us pull back, you know you're not Bob. Bob bought up here at 540. Okay. I bought up here at 540. Am I worried? No, I just watched the Bob story because it's a long-term buy and hold. And again, I'm losing money. I don't optimize my whole portfolio, but I'm also not sitting there staring at charts all day. So this is his thing from yesterday, the things that make you money. Buying stocks is easy. Selling's a little bit trickier. It's a little bit trickier. So he goes through the entire thing about drawdowns. Risk in the market is ever present. The only thing that changes is your perception of risk. It is a great short read. Okay, it is a fantastic short read. I liked it. It's easy. Buying and selling, it's easy. It's the holding part that's hard. And that's what he goes through. Now, this is an example. This is how you do it. Okay? You might say buying and selling is easy. This guy invested $1.2 million in Berkshire Hathaway. Okay? In 1985. Okay? The most rich, crazy rich motherfuckers you'll ever meet will be at the Berkshire Hathaway shareholder meeting. They have made a fortune. It's worth $450 million today. That is amazing. Amazing. But that's how you do it. And that's what Ben is talking about. He's talking about buying and holding. Okay? Biggest stock movers today. Texas Instruments. We'll go over it. Is this, I'll give you a little hint. Maybe it's time for a little triple leveraged on the semiconductors with these. The earnings were great. ServiceNow, great earnings. Now, what's interesting is IBM. It was a great earnings. It was a fantastic earnings. We'll go over a little bit. It's down 7%. And Nokia, I mean, listen, unless you like flip phones, you're not in Nokia. You can trade that one. I just don't think that they're on the cutting edge. Now, China calls on U.S. to lift all U.S. tariffs. Here's the thing. China is the clear focus, okay? China, in my opinion, is winning this battle. The U.S. is going to have to back down. They said, hey, the U.S. picked this fight. They need to make the first move. And what does Trump and Besson say? Well, the Chinese want to negotiate with us. And the Chinese are saying no. And then what does Besson say yesterday? He said it might take 2 to 3 years to negotiate with China. He's setting the stage that this is prolonged. Okay? That's the market that we're in. It's going to be, oh my God, they said this. Oh my God, they said this. So again, I go back to the beginning. Whatever I said could change the markets in an instant. It's clear the bond market got Trump's attention in the first time. That's what softened his tone. It's forcing his hand. I think you're seeing the administration keep the market range bound. And when I say range bound, look at the 4-hour algorithm right here. Okay, this is we'll look at a daily chart. We'll take all of that stuff off the chart. And when you look at this, you're going to see this huge low down here. That is April 7th, okay? That one, the low is 402. And so I think on the Qs, I think the mid fours, 400s, is probably going to be your main top. I'll look at this one, the March lows right here, March 13th at 467. We didn't reach that. Remember, that was where the pop was. And then we started hitting lower highs. And so I think this key right here, March 13th at 466, might be the key to where the resistance is going to be. And that might be it. We just got a death cross of QQQ. So it's not like, hey, all of a sudden we're in this huge mode. Look at the volume, okay? On these days, when all of the news came out, the volume is huge. The market is coiled. But I want you to do three things before you buy in this market. The one, identify the time frame of the purchase. Is it a short-term trade? Is it a long-term trade? Is this a technical trade? Is this a fundamental trade? Am I going to hold this through earnings? Have a strategy and a plan. Identify where you're going to get out, the bottom and the top. Okay, in this market, you want to identify where you're going to take profits and where you're going to take the loss. If it's short-term, I would suggest paying yourself a commission. Like I discussed before, I used to have to pay $50 on the in and then $50 on the out. It was $100 to trade a stock. Pay yourself a commission. What do you do with that commission? It's not like you just put it in cash. You go and buy VOO or you go and buy QQQ, and you don't touch that for 20 years. That's your commission fund. So I think those three things, because if you got to pay yourself a commission and you can't touch that money, and yes, it's mental, yes, it's psychological, but you're going to think twice. Is this a place where I really want to get in? Is it because the MACD on the daily is 11 points under the oscillator and the RSI is at 47? Is it because, 2 days ago on April 24th, April 21st, the market was down at 427 and you're 454 now? Is it because, the 9-day is starting to turn on you? Is it because the Bollinger Bands are wide open and you're down at the bottom and this likes to trade at the top of the Bollinger Bands? Again, identify the strategy that you want. Is it because QQQ, all of a sudden you think it's going to turn around? I mean, that could be as simple as that. We can go and look at SPY, because SPY, we can go and look at the daily at SPY. I think it was 548. We can look at 548 right here. 549, 548, right in that point. 548, 549. That was your low in March. And where it looks like we're not even back up there. We can't start moving until you get back up there. Okay, that would be my first line of defense, is that if I'm going to buy this one and it's a short-term trade, I would be looking at that as the move. Now, that's not a big move. You can buy a double leveraged ETF, but identify your downturn as well. But if you don't think the games aren't going on, you're not watching the market, because Trump meme coin was up 35%. The official website announced the top 220 holders of the coin will be invited to a private dinner. Yes, it's a grift in the Oval Office. That's what's called pump. Okay? They're losing it in the stock market, but they're making it up on the back end by pumping their crypto coin. That's it. I mean, this is what's going on. He is literally watching the market on a daily basis. Okay? And this, now remember, this is an example of why you buy and hold sometimes. Now, we can take a look at this. This was from a very long time ago. Average cost $13.19. So let's go over to Tesla and let's look where it was trading at $13. We can look, because we can't tell the exact date, but we can tell at $13, he probably bought down here in May of 2019. May of 2019. He sold out yesterday. Okay. He made 1,825%, a $10,000 investment, turned into $197,000, nearly $200,000. But when you look at this, did he time it at the top? Would you consider this a win or a loss? Because some might say, why didn't he sell at $450? That's almost double where it is today. Okay, so that $200,000, did he lose $200,000 because he could have sold it for $400,000? Or did he make it $200,000? Glass half empty, glass half full. You have to decide for yourself how you want to play stocks. But this is an example. He bought and held. He had a reason he was going to sell. And that reason, by the way, is because he doesn't believe that Elon is going back full time, that he's got too many distractions. I don't get it. I don't understand it. But again, it's a look at what buy and hold makes you. Now, yesterday we got a just TEM. This is the AI platform. It went crazy when Nancy Pelosi bought it. We can look at it right here. And we'll go back here. This is where, if we just go to the daily, you can see Pelosi bought right there. Pelosi bought right there. You had this gap fill all the way back to the gap. Okay, all the way back to the gap is where you had this. I think she bought actually a little bit closer. I forget. We will go in and look at it. We'll go into what's happening now. We'll go to the Pelosi tracker, and then we can see January 17th, TEM. She made a purchase, value from $50,000 to $100,000. She put it in there. And then we got news yesterday, and you wanted to buy it at the same price that she did. Did you have an alert on that? Because you got down to about the price. You filled this gap. If you had an alert and you bought it 34, you're at $50 right now. That's fantastic in just a couple of days. It was April 9th. So what? 15 days? And again, Trendspider, you can set all of that up. You could have had an alert in this thing. You don't need to watch the stock chart. You just have an alert. You can trade it on the 4-hour algorithm if you want. 4-hour algorithm over the last 10 months, because it's only been around 10 months. Okay, it makes you 20% versus buy and holding makes you 25%. So maybe the 4-hour algorithm works for you. Your average win is 30%. So again, there are tools in Trendspider, and I just highlighted on this one how to get it. It's the Pelosi tracker. It's what's happening now. I don't typically use that stuff, but when I saw TEM spiking yesterday, I said, you know what? That's the Pelosi stock. I didn't have an alert. It's not in my game plan, but maybe it's in yours. For if you were one of those people that said, God, I should have bought it when Nancy Pelosi had it, because look at that gain. You could have gotten it any point in time at 47. It ripped all the way up to 88. And yesterday's pump was on news. Now, gold plunges by most since 2021 as Trump's softer stance on the Fed and China ease fears. It was down yesterday. It's back up to about where it was yesterday. So I don't think it's done. I just think it's run too much. I'm still holding my gold trade. I still have a couple of stocks in gold that I do own. Not very large. But this is GDX and GLD. GLD is the gold spider shares, and GDX are the gold miners. You can own either one. They're both strong buys on the quant. I still like Bitcoin. And I think Bitcoin is on its way to 100,000. And IBIT right here is just breaking through the 200-day. So I still like Bitcoin. For me, Bitcoin is a buy and hold. I don't think gold is a buy and hold. Just me. And I'll tell you, while we're focused on gold, while we're focused on Bitcoin, while we're focused on tech, because I am a tech investor, don't forget about GLP-1s. Okay, these are the weight loss drugs. And they are going through some changes right now. But you can see Novo Nordisk and Lilly, those are the leaders. Here's some other ones that you can look into. Okay, and they ask one of the experts, Stephen Ayers, who's in which weight loss drug he favors. He covers them. I don't. Go and read the story. Okay, 3 stocks I like right now after earnings. Okay, first is VRT. VRT blew away earnings. You're seeing it come back. You're seeing it right now. It's up at 3.17, but you saw it come back. I think that $90 is the first level of defense right there. It's at $80. That's a good percentage move. The 4-hour algorithm got you in at 70. Okay, it makes you 317% over the last 2 years. It's a good strategy. I like it after earnings. It is expensive. You're going to have some issues with this one. Seeking Alpha analysts love it. Wall Street says it's $112 stock. There are 24 analysts that cover it. They have brought it down. That's a 44% increase from where you're trading today. The valuation is absolutely nuts. But if they continue to grow, the PEG ratio is good. Look at the revenue growth per year, 20%. That's damn good. Another one I like after earnings is ServiceNow. ServiceNow just got an entry in the 4-hour algorithm at $816. It's now trading after their earnings last night at $889. That doesn't get you up to the 200-day, which is at $968. You've got a gap from their previous earnings where software just shit the bed from $1,130 down to $1,049. We can go over here to ServiceNow. You can see they're growing by 22% year over year revenue. Their valuation, crazy. You add in their PEG ratio, and it's reasonable, just not great. But I like this stock. Wall Street thinks it's worth $1,048. That's a 29% upside from where it is. Yes, they've brought their stuff down. But when you look at their revisions, they blew it away last night. And so these revisions down were completely wrong. It was lowered expectations. When you look at this one from a weekly standpoint, that 645 right there at the 200-day, you're under the 50-day. That's been the line where it's been to buy. Okay, ServiceNow is just software. So I like this one. A third one I like, GE Vernova. This has all the power. This is a power company. This sells all the power shit. I like this. Okay, they just had earnings. They are up 1.82%. The 4-hour algorithm had you at 309. You're at 335. It's like a 10% move. Now, the 4-hour algorithm doesn't work great. But when you're under the 200-day, and we've talked about this, under the 200-day, and it moves up, I think that's one that you want to look at. Again, this has only been around 13 months. You have 14 positions. You only win 30% of the time. But everything seems to be adding up here. Is it crazy to think that this one is too expensive and won't move? Look at the revisions. They're kind of even. You've got an A on everything except for revisions and valuation. The valuations is stretched. Even the PEG at 2.7 is a bit stretched. You look at the revenue growth, 6%. Wall Street thinks that it's worth $398. And they brought it down a little bit. You meet somewhere in the middle. Again, it's at 342. If we look at the 52-week range of this one, the high, 447. So again, those three, all of them had great earnings. If they pull back, I'll be looking to add to them. VRT I've owned in the past. Now I've owned in the past. I have not owned GE Vernova, even though I've wanted to. So let's talk about earnings right now. IBM is just the perfect example of why earnings are so tough. They had a great earnings quarter. I mean, we can go and look at it. Where's IBM? IBM right here. Okay. They their estimate, $1.40 per share. They beat $1.60. Their revenue, $14.4 billion. They made $14.5 billion. They beat on both. Their guidance, positive. And yet it's down 6%. It's just an old time stock that is getting, it's around this 200-day and it's trading at 228. You've had a great run up. Look at the weekly. The MACD is still stretched. The RSI is in no man's land at 56. So your guess is as good as mine where it would go after that. But that with that MACD still stretched, it was just overbought. So I don't expect this to stay. I expect the stock to move back up. but you can absolutely look at that one as a reason where earnings are just tough. Earnings are just tough. And Texas Instruments, we can go TXN. They had really good earnings as well, and they're up 10%. Okay, this is a semiconductor stock. Is it time for semis to get their They are getting semis right now. They're not reporting bad earnings. You look at Taiwan Semiconductor, things are going good. I would argue it might be time to look at a triple leveraged ETF on semis, maybe SOXL. And you know what? The 4-hour algorithm, it makes you 11% versus buying and holding loses you 30%. Do not buy and hold a triple leveraged ETF. Do not do that. But you can see this fall from semis. That's it. I mean, look at this weekly. It has fallen. Look at the volume of last week. That's a 30% candle. 30% on April 7th. You're bound to get something like that again. So Texas Instruments last night, kind of an interesting one. Earnings tonight, we'll go into the software, the safety blanket, and the storm, and we would own the big three. This is Dan Ives, Microsoft, Amazon, and Google. As rumors fears that CapEx is being cut and data centers are being abandoned is not our findings in the field. We believe AI, cloud-driven spending holding up in the storm. He's calling it. He's calling it. And you know what? Google, same valuation, 70% higher. So the PE ratio is the same as it was way back here in 2022 when it fell down to under $100. And yet you're 70% higher in price. But the valuation's the same. This is getting taken down unnecessarily from the search threat of AI. And I just think, again, Google for me, they have so many levers that they could pull. Go and, if you haven't signed up for Google TV, go and look at it. There's these interstitials is what they're called. So when you're watching commercials, they say take a meditative break. YouTube TV is an enormous property for them. Okay, YouTube as a whole, I think they do a great job of monetizing on YouTube. With my channel, you know, they throw in ads all the time. But then you go to YouTube TV and they don't insert ads. That's an opportunity. If Google were to get the valuation that Tesla has on their full self-driving for their Waymo product, this would be a $400 stock. Again, it's at 19 PE. We can go and look at Google right here, and it's still not a strong buy in the quant. And it's because the valuation, again, the valuation isn't great. They're saying it's a little bit expensive because all the other ones have a PE of 12. It's just comparative. Their revisions are coming down. Nobody's bringing these up. But I would argue that between 150 and 190 is a space that you want to start buying in. Now, we saw it with IBM. So just be careful. I mean, playing earnings. I am not selling my Google. I am looking to add more, but I want to wait until the earnings come. That's just my thing. Now, Intel reports tonight. If you go over here to Earnings Hub and we look at Intel, their expected earnings per share, 1 cent. They reported 13 cents last time. Their revenue, 12.3. They reported 14 billion last time. It's an interesting opportunity. Do I think it's going to pop? I don't know. I mean, you got this gap up here at 25. That would be a what, 25% move? 20% move? The 4-hour algorithm got you in at 19. Okay, the 4-hour algorithm over 24 months makes you 14%. This has been a super volatile stock. Does it make sense? I'm not a big fan of this company, but I'm a bigger fan without Pat Gelsinger at the helm. So I think their new CEO is going to do good. It's just risky to me. Now, T-Mobile is an Alpha Pick stock. You know, Alpha Picks, if you don't know what Alpha Picks is, you can get the bundle here. You're seeing me use Seeking Alpha, but the bundle here between Premium and Alpha Picks, you save $159. Go over to my link tree. It's the second link. And if you just want Alpha Picks, which is a data-driven portfolio, get more information, save $50 when you click on the fourth link. But T-Mobile is an Alpha Pick stock. Its valuation, crazy. 26, 24. It is super, super expensive. The PEG ratio, a little bit lower because their growth isn't that bad. Compared to everybody else, they're not that bad. And you can get this analyzed with AI, and we can go over here and look at the valuation. Why does it get a D? Significantly overvalued compared to its sector peers. Its price to sales ratio of 4 is much higher than the sector of 1, indicating a costly position. Why is growth so good? T-Mobile shows commendable growth with a forward earnings per share growth rate of 23%, substantially outperforming the sector median of 8. So growth earnings per share right here. You can see 23% going forward, which is 9% on the rest of the crew. So you've just got to make a determination. Is T-Mobile worth it? Well, we can go over here and see T-Mobile. They reported last time $2.57. Their estimate is $2.46. We saw Verizon and AT&T take off after earnings. Maybe this one does as well. Maybe things are just good. Now, one that's reporting that is an alpha pick and a top 2025 pick is Celestica. Is scheduled to announce their earnings today. The earnings consensus is $1.12 and the consensus revenue is $2.56. Okay, that would be a 30% year-over-year growth on earnings per share and a 15% year-over-year on revenue. Over the last 2 years, Celestica has beaten estimates 88% of the time. It has beaten revenue estimates 100% of the time. Over the last 3 months, earnings per share estimates have seen 8 upward revisions and 0 down. It's a strong buy in the quant. Okay? You can see the valuation. It's a little bit stretched. The profitability, a little bit stretched. But the stock price has done really, really well. And when you look at it, it's pulled back. It's pulled back here from $144 to $88. Okay? I think it's an opportunity. Now, am I buying in? No, I hold at a much higher price. I think I may have bought at 70 as well. But I do hold at like $100 as well. But the 4-hour algorithm got you in at $77. You win 53% of the time. So would I be buying here at 88? I would be looking at that 200-day at 97 as a potential resistance. But if you're okay buying at 91 in pre-market and 97 is your thing and you identify that, go and have at it. Just identify your down. I would probably identify my down at around $80, risk reward. That's what you have to do in this market is you have to identify where your risk reward is. Okay, the risk reward ratio of this, the 4-hour algorithm is 6.59. It's not bad. It's pretty damn good. Again, if you want any of these tools, go over to Linktree. There's Trendspider, which is on sale. You can get it at the sale link right there. There is Premium and Alpha Picks, which is Seeking Alpha Premium uses the quant to give you an easily identifiable score of a stock against its peers. And then you've got Seeking Alpha Premium just by itself and then Alpha Picks. Okay, you can get them separately as well. Then what you should do is sign up for the newsletter because it's free. I will have a paid section, but all the notes that I use today, it's free. It's free. You can just go to Linktree and it's right down there. You can join Webull. And Webull, my account, I think we're still over $10,000. Let's see. Yesterday I was over $10,000. It's gone from $13,000 down to about $7,000. We're at $10,161. This complete portfolio consists of Apple, Google, iBit, Nvidia, Spotify, and Tesla. That's it. And I use it as my betting account. I got a couple $1,000 that I can bet on triple leveraged ETFs, and that's it. And maybe Robinhood is your thing. Go and get Robinhood shares. You can get it right here. Claim your free stocks. Hold on. Stop! Hey! I'm sorry. And then you can go, get down here. If you want a mobile phone service, get $20 off your first month of Visible. If you want a Tesla, you can save money on Tesla. You can even get AT&T Fiber, is what I use. It is all here. And if I've made you money, you can always gift me with PayPal, Venmo, or Cash App, whatever. But all the socials are up here as well. Linktree is the central hub for everything. If you have any questions, hit me up. I will talk to you tomorrow. See you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss